Welcome to the Americas Society and Council of the Americas. We have an extremely interesting event this evening on microfinance and clean energy. Before we get into the panelists, I just want to introduce myself. My name is Christian Gómez, and I'm the Director of Energy here at the Council of the Americas, but I'm actually based in the DC office. So I'm happy to be here and with this excellent panel. Just want to give you a quick note about what we do in the energy program at the Council of the Americas. We run something called the Energy Action Group, which is a public-private dialogue that meets regularly throughout the hemisphere to discuss hemispheric energy issues. We try to issue reports and recommendations, publish op-eds, articles, working papers, and congressional testimony on the topic of hemispheric energy. And I think today's panel fits in very well with that mandate because we have panelists here who are in the trenches working in clean energy, working in microfinance, which is an extremely relevant issue in the Americas. I just want to draw your attention to a few data points. Globally, 1 in 5 people lack consistent access to electricity at home or at work. In Latin America and the Caribbean, energy poverty extends to 34 million people who do not have access to electricity, and another 85 million people lack regular access to clean and modern cooking fuels. Now, there's great benefits, somewhat obvious, for energy access, and our panelists will talk more about this. But increased energy access leads to increased productivity, health, safety, and education. And inefficient energy use contributes to carbon emissions and climate change. And I think that's where microfinance comes into play. Microfinance serves as a way to get energy-efficient devices and renewable energy accessible to the base of the pyramid in Latin America. Historically, the number of MFIs, microfinance institutions, that are actually reaching the poor through energy loans are small, but that's a growing number of MFIs. And MFIs have an advantage because they have access to networks in rural areas that can disseminate information and distribute the devices and technology. So I'll let our panelists delve a little bit deeper into these issues, and I'll take this moment to introduce them. Greg Watson, to my right, is head of strategic planning and partnerships at the Multilateral Investment Fund at the Inter-American Development Bank. He's the team leader for the MIF in their energy and clean environment and clean energy team. And his team's projects focus on green microfinance, climate investment, energy efficiency, and many others. Next, Amy Wang is an investment officer at Deutsche Bank in their Global Social Investment Funds Group and supports the bank's management of social finance funds with a particular focus on energy. She was previously an investment associate at Centinela Capital Partners and was an investment banker at Citibank. Finally, Nikki Armacost, managing director and founder of ARC Finance, organization that links the fields of finance, energy, water, and sanitation. She has over 20 years experience in microfinance and development throughout the globe and is currently an advisor to many organizations, including Distributed Capital, Frontier Markets, Simpa Networks, among others. As I've already mentioned, we have a tremendous panel. We look forward to their contributions. Following opening remarks, we'll ask a few questions to draw out some issues, and then we'll open the floor for Q&A. With that, I will cede the floor to Greg.
Thanks, Christian. I wanted to start just to explain a little bit what the Multilateral Investment Fund is. We're a fund within the Inter-American Development Bank. We're capitalized by donor countries, and we do grant, loan, and equity projects in the region of about $100 million per year. And our original focus was, it's always dealing with the private sector, originally dealing with microfinance, with small businesses, small farms. In the past, about 10 years ago, we included poverty reduction in our mandate. And what's interesting is that the MIF has always, in its 20-year history, we're celebrating our 20th anniversary this year, worked on energy issues, but they weren't, and climate change issues, but they weren't called energy or climate change. We talked about efficiency in businesses. We talked about poverty alleviation through alternate sources of energy, but it was done through the microfinance wing of the MIF, or it was done in the farming part of the MIF. And so what we did a couple of years ago, we saw that our clients were demanding kind of a consistent focus on clean energy and on new technologies. And so we created a group specifically to work on those areas. And a lot of the lessons that we had learned over the previous, at the time, 15 years was that climate finance and the microfinance for these types of projects was really lacking in our region. We had small businesses that were distributors that were bringing product to market that couldn't get loans to grow. We had consumers who wanted to purchase technology that they weren't able to purchase because they couldn't get a loan. And we also had small businesses that wanted to implement energy efficiency, and there was just zero understanding in the finance market at the grassroots level in Latin America and the Caribbean as to how to do that. That led us to start with basically figuring out what the state of the market was, and I'm not going to bore you with a bunch of slides, I only have 3. But we worked with Bloomberg New Energy Finance to create the climate scope, and there's some copies outside, to basically figure out what was the state of play. What are the levels of climate investment going into Latin America and the Caribbean? What are the enabling factors? And one of the things that was very important to us was to make this differentiated, was to look and to see at the microfinance level what was happening at that level, and also at the small business level in terms of value chains. So the climate scope measures these 4 different areas, and these are the weights that we assigned, but if you go online to the climate scope tool, you can change the weighting to whatever you're interested in. And I'm only going to really focus on the clean energy investment and climate financing, but it measures 39 indicators. One thing that's interesting in the policy side, which we're not going to get into, is that the policy changes are really starting to have an effect in Latin America and the Caribbean. In 2011, which was the first year of the climate scope, there were 80 policies that were basically incentivizing clean energy investment at all levels in the region. And that rose to 110 in 2012. I'm also not going to here to talk about value chains today, but they're growing. And in the climate scope, we see that many countries are starting to get very developed value chains. And when we say value chains, we mean everything from project developers, attorneys that are specialized in the design of these projects, to financiers, to product producers. And the only thing I want to say about that is that's creating more and more demand for MFI lending for these small businesses that are in these value chains. Now, this is the rankings for 2013, and you can see the different countries basically ranked on those 4 categories, and it's not a surprise. I mean, everybody would expect to see Brazil at the top. The little arrow shows what happened from the year before. But one of the things when I show this to people is that if you were to talk to an investor and you were to say, what are some great markets to invest in Latin America and the Caribbean, I bet most of you would not say Nicaragua. But if you look at kind of the empirical data, you start to see that there's a lot of activity in countries like Nicaragua. And one of the reasons why it's an interesting market is there's a lot of activity at the microfinance level. Latin America and the Caribbean last year's climate investment dropped by 3.8%, but actually globally it dropped 11%. So Latin America and the Caribbean actually did pretty well. And Brazil dropped significantly, and if we take Brazil out of the equation, the rest of Latin America and the Caribbean climate investment was actually up 45%. And Mexico was actually up in the level of hundreds of percentage points. This is the investment rankings. It's a little bit of what I was just saying in terms of the drops. On green microcredit, last year, 63 MFIs in Latin America and the Caribbean dispersed close to $400 million in green loans. And those are the 2 countries that Peru and Chile were the leaders. And we see that increasing significantly. We've seen a lot of both regulated and unregulated microfinance institutions start to provide credit either at the consumer level or at the small business level. So I just wanted to kind of set the stage a little bit in terms of what the baseline was, and Christian might have some other questions about other areas.
Okay, Amy, if you don't mind with your remarks.
Sure. I think it hinges very nicely from the great work that, sure. Is this a little better?
Yes.
Okay, great. Well, I think it hinges very well from the great work that Gregory is doing to the work that Deutsche Bank as a firm and as a group does. So most of you are familiar with Deutsche Bank, the large global investment bank. As a firm, we have a very firm commitment to climate change and delivering solutions at a very high level, ensuring that as a firm we are carbon neutral. But from a more personal note, our group, which is the Global Social Investment Funds groups, takes a much more targeted approach towards figuring out solutions of addressing climate issues that directly address the poor. And we think this is a very interesting time to be within this space, as costs are decreasing within energy efficiency solutions, as well as technology innovations are occurring, and some very interesting social enterprises and entrepreneurs are emerging onto the scene, as well as this increase in microfinance institutions that are starting to see their delivery channels being capable to offer these types of products. We see the opportunity to be able to partner, build, support these types of institutions through funding. And so my group as a whole, and there's a number of us in the audience, we're basically capital providers. We have a series of 8 different funds over the course of 15, 16 years now that have developed from the very philanthropic arena of seeding very early stage microfinance institutions to now very commercially oriented funds that looks at tier 2, tier 1 institutions across the globe. We're in over 30, 40 countries in many different MFI relationships. That being said, as we start to work with our MFIs and start to see some of the opportunities for them to offer products to their clients that is specifically address energy products or solutions, we're also looking at, 1, supporting the MFIs that do that type of work, as well as 2, try to play kind of the private investor to some of these entrepreneurs that are going out and setting up institutions. And so in that sense, we're trying to use our funds in a flexible manner, whether we leverage our philanthropic capital to support early stage social enterprises that deliver solar lanterns, cook stoves, that type of work, or set up specialized bespoke investment vehicles in collaboration with other institutions such as the Global Alliance of Clean Cook Stoves to help support just cook stove startups around the world. So we have a host of different funds and different spectrums of what we look at, which we can get to in a little bit.
Great, thanks. Nikki?
Thank you, Christian. Let me tell you a little bit about ARC Finance and the work that we do. So we're on the micro end. We've got Greg, who's sort of macro, and Amy, who's sort of intermediate, if you like. And then we're really focused on the micro end. We're really interested in financing solutions for end users, so for individual consumers in the developing world. And there are a range of different solutions that we have focused on trying to help develop. So microfinance is one which I think you're all very familiar with. Although what we found in our work is that there are a range of different models that microfinance organizations are using to finance clean energy. And we're working with a number of institutions around the world. Many actually are in India and in Uganda, but also some in Latin America as well. Some of the other solutions that are quite interesting are solutions related to remittances, so cross-border money transfers. Microfinance organizations, some of them actually do receive remittances. So it's an area which kind of overlaps with microfinance potentially, but it's an interesting, innovative way that poor people can finance clean energy solutions. Some of the other ones that are maybe less familiar for people are asset finance models where a solar company will develop its own internal financing component. So for example, where there isn't a microfinance entity in the area where that solar company is operating, or where the microfinance institutions are not interested in providing finance for one reason or another, those companies are developing their own internal financing mechanisms, pay plans, or other mechanisms to help people pay in an incremental way. So what we're doing is we're taking the lessons that we learned in microfinance, the idea that people like to pay in small increments, and applying that to helping solar companies develop responsible ways of providing that kind of finance. There are also some interesting technology solutions, for example, pay-as-you-go, where the company has developed a metered system that, again, allows for the payment in small increments. So, when I was a little girl growing up in England, we lived in a very old house where the electricity was provided through a meter, and you literally put money into the meter and then the light would go on. And my brothers and I used to fight to be able to put the money in the meter. That idea of being able to pay as you need it. So, for example, if I'm going away on holiday to wherever, somewhere, and I don't want to pay for my electricity in that time period, I don't have to put money in the meter. So there are a set of companies that are around the world. One of them actually is operating in Peru, a company called Lumita, where they're developing these metered solutions to attach to solar, to attach to biogas solutions, to help poor people pay in these small increments. And we think those are very, very interesting potential models that may end up developing in the future, may also be associated with microgrids, for those of you who are interested in the area of microgrids. And then there are some interesting models associated with mobile phone technology, and there are some very traditional models that go back to the time of Alexander the Great. There's nothing new under the sun about it. It's about people in communities working out ways to pay for something collectively in an informal way. So we're seeing all of these different models. We work in Afghanistan, where you can imagine microfinance is already tricky. And so some of the traditional models are the kinds of models that work in those places. So maybe later on we can go into detail on some of those different ideas.
Great. Well, thank you for those opening remarks. Start talking about, Nikki, maybe start with you. The topic of remittances has been very interesting because I personally have not seen how that ties into microfinance and clean energy, but it seems like through your work you've looked at remittances and seen that link. Can you elaborate a little bit more about that?
Yes, I have to actually start out by thanking Greg because the Inter-American Development Bank funded the work that we're doing with Soje Express, which is a remittance company based in Haiti that's part of a consortium where there is a microfinance organization called Soje Sol, there is a bank called Soje Bank, and Soje Express is the remittance entity. And Greg didn't mention this, but he has a remittances past, and we concocted this idea that maybe it was possible to finance clean energy through remittances. Remittances, as many of you know, it's a $400 billion flow of capital from developed countries to developing countries. And there are many economies that are actually run on remittances. Haiti is a country which has a very low electrification rate. At the time we started, I think it was 12%. It's now gone up a little bit to maybe 20%, 28%. And it has a very high remittance flow to the country. And the remittances are coming mostly from Miami, from New York, Montreal, and they're all flowing into Haiti. So this combination of a large flow of capital coming in and an absence of electrification looked like an interesting model on which to sort of test a pilot. Could we find a way to have remittances pay for the clean energy devices? So we came up with a plan whereby the sender based here or in Miami would pay for the device here, and the relative would receive, instead of receiving money, would receive a clean energy device of some kind. A small device, maybe a simple lantern, or a device that lit several rooms. The prices, we worked out that probably the best price, the most comfortable price for people to pay was about the size of an average remittance, which is about $125 to Haiti. So we put on the platform products which are a little bit less than that and a little bit more than that. And then people would be able to literally send light to their relatives. And the thing that was very interesting for us in the very beginning, actually Maria, who's sitting on the corner here, did this market research for us. In the very beginning, when we were asking the senders, would you like to control the use of the remittance? They said, oh no, it's a gift for the family. We don't want to control it. It's for them. And then afterwards, when you ask them, do you pay for education directly? Yes. Do you pay for medicine directly? Yes. Do you pay for school books directly? Yes. Do you pay for doctor's bills directly? Yes. So there was a desire on the part of the senders to control it. They didn't want to admit it. So this was perfect for them. If I'm sending $100 to my mother, I can be sure she gets the light and that she doesn't spend it, on my least favorite sister's sweet 16 party for her daughter, that kind of thing. So it was quite interesting to see this. And the project ended up being very, very attractive to the receivers and to the senders. We found there was a real demand on the receiving side for the products. And people kept saying, why can't we buy all of these products in Haiti ourselves? Why do we have to wait for our relatives to send them? And initially I was thinking, well, we're testing a remittance platform, And then I thought, are you out of your mind? I called up Greg and I said, Greg, do you mind if we sell these directly? And he luckily said, no problem. And so we ended up finding that actually the largest volume of sales ended up being in Haiti to receivers of remittances. So they were people who received the money and then they used that to buy products in Haiti, which was quite fascinating for us. So anyway, if any of you are more interested, I'm happy to tell you more about the project and some of the successes we had later on.
Greg, can you describe for us right now, what is the current state of climate investment? What does that mean, and what's happening in the region when it comes to that?
Sure. I might also just kind of piggyback on something that Nikki just said, which was that for us, we had worked in remittances, we had worked in microfinance, and we saw that one of the challenges was actually distributing product in Latin American countries. It's very difficult to get product. I mean, there's not vendors. There's not, the corner store is not selling solar lanterns. So one of the very attractive aspects of both microfinance networks and remittance networks is that, a remittance business is a capillary business. You have to be close to the client. So there's already an infrastructure to get any device. It doesn't have to be a solar device. Right. It could be really anything close to somebody. And there's a financial flow that's going alongside that, where we knew that remittances, we knew that a certain percentage, and I can't remember the exact percentage in Haiti, was going to purchase kerosene. So we knew that there was a substitution. We knew we had the substitution effect, and we knew we had the distribution platform. So that was really important in that. But to answer your question, maybe I'll flip it a little bit and talk a little bit about what we're doing to kind of address what we see as microfinance needs in the region. Because I think I laid out a little bit where we are, but to talk a bit about kind of where we think we can go. When I first took on the team leader role, we have an event called the Foromic every year, and it's the largest microfinance conference in Latin America, and there's usually 1,500 people there. And I invited people MFIs to a working group to talk about microfinance and clean energy, the same topic as today. And I had to cajole some of the people I'd worked with in the past, but we got about 25, you were there, Nikki, actually, yeah. 25, 30 people in the room. And we saw some skepticism. We saw, when you said, are you interested in climate finance? All of them said no. We have no idea what that is. And then we said, well, are you interested in products and credits that your clients can use to be more efficient in their use of energy? Oh yeah, our business clients want that. Do your individual clients, do they want to be able to purchase kind of products that would allow them to work later into the night and be more productive? Oh, definitely. Are your clients, rural clients, experiencing dramatic impacts from weather changes? Oh, definitely. We need to come up with ways to help them, get new seeds or to come up with new mechanisms to avoid, basically to adapt to climate change. But they weren't using the vocabulary of climate change. They were using the vocabulary of people, their clients on the street. And at the end of that session, a couple of things became very clear. You had institutions that had a lot of liquidity, because at the time, MFIs in Latin America were very liquid, and they still, to some extent, are. And you had MFIs that had, in many cases, completely saturated urban markets, and so there was no growth potential in urban areas. So they knew they needed to go to rural areas or to new markets, and they knew that there was something that they should be doing, that maybe there's some opportunity here in this energy stuff and this adaptation stuff. So what we did was we created a program that kind of packaged all this together and fed it as a pill. I always talk about this kind of as a dosage to the MFIs. It's called EcoMicro, and it was co-financed by us with the Nordic Development Fund. And it's a $7 million facility of technical assistance that will do 12 projects in 3 rounds over 3 years. And what EcoMicro is, and the way we created it, was that it's demand-driven, basically. We want to really respond to the demands of the institutions. We're not going to tell them which product they have to offer. We're not going to tell them, you need to offer energy efficiency credit to small businesses. No. The MFIs come to us in a proposal, rounds of proposals, and say, we've identified this need in our area. We think we can meet it, but we're not quite sure how and what product we need. It bridges the gap between climate change and competitiveness, and it speaks the language of competitiveness, and it speaks the language of kind of low-income development. And it focuses on both urban and rural, and we don't define microfinance institution by how you're registered. We define it by the type of activities that you do. So, you don't have to be a registered MFI. You could be a cooperative. You could be, anybody who's offering this kind of lending. And it offers 3 modules, and each institution has to take all 3 modules, because we did a lot of research, and we found that if you want to have a successful product, and we saw this in remittances back in the day too, is that any product, you have to have strong buy-in from the corporate leadership. So how do you get that in climate change? First, you start by doing a footprint of the institution itself, so that the MFI sees, well, we're using this much electricity, we're using this much water, and you help them to figure out how they can reduce their own footprint. Because that starts to get everybody in the institution thinking on the right track. Then you say to them, you have these huge portfolios. For example, in Costa Rica, you would have a huge portfolio of coffee at 1 altitude. And you say, well, what happens if the temperature increases 1 degree to your portfolio? Oh, I didn't think of that. But yeah, some of the farmers are having a hard time paying us because they're having more coffee rust, which is worse than it was before. And we said, well, have you thought about what the systematic impacts could be to your portfolio? So that you're speaking business, you're speaking numbers to them. And they say, oh yeah, we should really look into that. So that's the second kind of dosage of the program. And then the third, which is the actual most interesting and the real purpose of the program, is to help them design the product. And so we pre-qualify a number of consulting firms that we think can do a good job. Nikki's one of them. To work with these MFIs. They come to us with the demands that they're seeing locally through an open call. And we provide them the money, basically the grant money. We don't pay for everything. We pay for about 70%. They have to put in some money too, some skin in the game, to develop products. And we've seen many, many, many institutions come forward. And I'm going to anticipate myself a little bit on what I was going to say later. But 3 years ago, there were 200 MFIs globally doing green microfinance. This is a statistic that we had seen in a report. I think it was from the UN. And we assumed at the time there were about 10 or 15 in Latin America and the Caribbean. With EcoMicro, we're doing 12 projects over 3 years. When I created EcoMicro, I thought we would have 20 applicants total over the 3 years. In just 2 years now, in the first year we had about 54. This year we had more than that. We've had 120 applicants in 2 years, just in Latin America and the Caribbean. And if we, through the statistics here, about 50 MFIs in Latin America and the Caribbean in the last couple of years are doing this, and we, 63, and we think that 50 of them might be new. That's about 25% of the total number of MFIs in Latin America and the Caribbean. There's 700 MFIs in Latin America and the Caribbean. 25% are doing something with green microfinance. So the demand has just been huge. And later on the next round, I could talk a little bit about what the specific projects are that the MFIs are doing.
Great, thanks, Greg. Amy, I was hoping you could kind of elaborate a little bit on Deutsche Bank. How did Deutsche Bank get involved in the clean energy space? What kind of investments are you making, and how do you evaluate the success of an investment?
On that note, though, actually, Greg, I think that with your success of engaging the MFIs on green microfinance lending, I think we need to talk afterwards. As a lender, we constantly we're looking for those opportunities. But maybe to give a sense of the overall Deutsche Bank platform, that would be helpful in determining how we started in early stage clean energy investing. So Deutsche Bank has kind of a spectrum of different funds. We have access to the Deutsche Bank Americas Foundation, and out of the foundation we have a vehicle called the New Initiatives Fund, which is able to seed very early stage and innovative projects, nonprofits, and entrepreneurs. And this is very early stage. We have then also brought in and developed, raised, deployed institutional funds from DFIs and other institutional investors, mainly focused on microfinance products. And these can be anywhere between 100 million to, 100 million. And the two methods that we typically have taken from this is that initially, we're starting from microfinance, and let's look to explore how we can first partner and understand the scope of clean energy enterprises and players within this space. So in the beginning, we started by setting up partnerships with people such as Ashoka, and setting up competitions such as the Solar for All competition. Through that competition, we were able to access a number of different business plans for solar lantern companies, and through that get kind of the first peek at enterprises that operate within the space. Through that, we actually provided a $250,000 PRI grant to a solar company you might be familiar with, Greenlight Planet. Moving from there, we have recently decided to make a firm commitment to setting up a specialized investment vehicle called the Clean Cook Stove Working Fund. And this is in collaboration with the Global Alliance for Clean Cook Stoves, which is a collaboration of over, I believe, 700 members interested in the development of cook stoves around the world. And this fund will be seeded also from our foundation funds and from our carbon initiatives within Deutsche Bank to provide 3 to 5 year working capital loans to pretty much startup institutions that have demonstrated proof of concept. So these will be clean cook stove companies in around the world. We don't have a firm limit on the region that the company needs to service. However, we need to see a company that's able to demonstrate a sufficient level of social impact in terms of how many either carbon credits or what the tier is in regards to the types of energy it's able to provide, as well as the sustainability of the company. So we're looking at companies that have proof of concept, most likely a very solid management team with experience within the space, and probably around 2 to 3 years of working history. What we've found, though, is when we're looking at these cook stove companies and solar companies, is that many of the players that we are familiar with in microfinance have since made the move onto these types of energy companies, as much of the end client, the end behavior, the end distribution is very similar. In fact, one of the conversations that Nikki has put us in touch with is with Solar Now, who is led by a very vibrant CEO who has a very long history at a microfinance institution. And we feel that these types of opportunities with clients and players that we're familiar with are opportunities for us to explore. As we're looking to kind of address the issues within impact, though, we have our bespoke funds. We also are looking to directly provide venture debt type of funding to the companies themselves. So we've provided financing to some of the larger players in the space, such as Delight and Orb Energy. And these are a bit more commercial. These companies have been around for over 5-7 years, and they have demonstrated revenue, demonstrated ability to not just penetrate into a particular market, but also provide very high quality service customer service on these products. And we've provided financing to them to help them not just expand, but also explore their ability to develop working capital programs for their products. Because as Nikki rightly pointed out, one of the main concerns with financing these larger scale products, or even sometimes smaller scale projects, is that there's a very high upfront cost to these products. And so to engage the quote unquote poor person and get them to shell out the high upfront cost, there needs to be a kind of a mechanism on the financial front to really help them be able to make that connection. So we're exploring ways to work with these companies to help develop working capital programs, as well as work with the companies that are also working on the pay-as-you-go types of business models.
Very interesting. I guess this is a question for the entire panel. Whoever wants to jump in. what are some of the biggest challenges that these organizations are facing when it comes to financing, when it comes to promotion, when it comes to actually executing and becoming a scalable model? What are the main pitfalls and challenges?
Well, I'll just jump in. One of the programs that we're running is a program called the Renewable Energy Microfinance and Microenterprise Program, which is funded by USAID. And it's specifically geared at trying to encourage microfinance organizations to get involved in energy finance. One of the biggest challenges is the risk perception. And so one of the things that our team will do, I think, as Greg points out, it's very important to get CEO buy-in. You absolutely have to have that. You also have to have middle management buy-in. But actually what you really need is chief risk officer buy-in. That person is going to be the person who will identify all of the risks that are pertinent to that specific institution. Now, we know a lot of the risks, the perceived risks, but it's quite interesting. In each market, there's a little bit, maybe I would say maybe 80% of the risks are going to be similar, but then there's going to be 10% which are unique to that market. So I think that's one of the challenges, to make sure that you were talking about having bespoke funds. You actually need a bespoke kind of approach to helping institutions develop microfinance oriented clean energy programs.
I might jump in just to reiterate something that I was saying before, which is that you need to bridge the language gap. And I don't mean the Spanish-English gap, but I mean the climate and energy language gap and the client, the client kind of perception. And one of the things we do in EcoMicro is we actually create for the MFI, and I have it in front of me, where a chart with the examples of problems that clients might face or that MFIs see their clients facing, how that translates into challenges for the client, and what is the applicable green microfinance or green finance product. And so it's almost like the Rosetta Stone to bring these two worlds together, where, for example, here if you say problems that an MFI sees in their client base, which would be higher energy costs, blackouts, lack of competitiveness. And then, challenges for rural clients is that they have higher electricity costs, more expensive fuels. For the urban, it might be increased variable costs due to increased electricity cost for their productive activity that they're doing at home if they have a small home-based business. So, what are the different possibilities? Well, for the rural client, it could be a loan for clean energy to replace your unreliable electric supply or to replace your more expensive fuel. And you can do the math and the calculation to show where that's profitable. And then maybe for the urban client, it's an energy efficiency loan that reduces operational or energy costs. One example in Peru is that you have a lot of house-based businesses, and one of our MFIs is actually working on this, where that home-based business uses a lot more energy than a typical home. And so these businesses end up falling into a higher tariff, which is actually created for very high, basically wealthy families that use a lot of electricity. But the poor family ends up falling into that tariff, which is created to subsidize the poor families, because it's basically a transfer. So what can you do? If we go down the policy path, that's going to take forever. So why don't these MFIs are focusing on helping these home businesses implement energy efficiency technologies that bring them back underneath the home tariff. And so it's it's a clear business case, both for the MFI and also for the home-based business. And so you need to kind of translate good climate intentions or kind of good energy intentions into kind of numbers and good business.
So while that is entirely true, I would have to again reiterate Nikki's point, where senior management buy-in is absolutely critical. As we work with a number of the microfinance institutions that we fund, we found our ability to make the connection between some of our social enterprises, the energy players, very varying. For instance, one of the MFIs we fund is Gómez in Latin America, and they fund solar panels, and that's great. And they're actually looking to try to even sell some solar panels from their foundation. And this is very top top-driven. Whereas some of the institutions in India, which you would think that have a very strong alignment of interest of being able to offer these products, they've found it a bit more difficult to dedicate senior time. We've tried to make connections with some of our companies there, yet it's met limited success. But one of the reasons I would think that there's such limited success is sometimes there's a quality issue, and there are a lot of different products out there, and unfortunately, I think we can all point to the flood of products out there, whether they be positive or somewhat faulty. So, for instance, one of our Indian MFIs had actually developed a specific energy clean cook stove product, which was very it was lauded as in terms of its intention, but they had to pull it after a year and a half because the quality of the cook stoves were such that it was not up to the standard of the MFI. So while this MFI is extremely socially oriented and it would like to offer these types of products, that relationship that experience has kind of tarnished their interaction and at least the relationship with that particular product. So it will take a little longer.
I think. Do you mind
Please,
if I
please.
take up this point? I think, Amy, this idea of technology risk, microfinance organizations, what they're really good at is finance by definition. And so suddenly they're going into this space which is not exactly their comfort zone. And one of the things that they need to develop a skill set in is evaluating the technology and really you happen to have invested in some of the top energy companies, D-Light, Greenlight Planet, Orb Energy. These are all, very well-reputed lighting companies. And I think some of the companies that you're planning to invest in or have invested in already in terms of the cook stove space are all, top-tier companies. But it's an area that I think is very difficult. And I think the important thing for microfinance organizations, one of the things we've experienced and Saiful from our team can talk to you about this, is the importance of having microfinance organizations realize they don't have to choose the first technology company that comes in through the door, that they are super desirable. These are institutions that in the case of some of our partners in Asia are reaching literally millions of people. So they are actually very, very desirable. Their client base is a very desirable potential market for these companies. And they need to assess them very carefully, and they need to really look closely at things like after-sale service, at warranties, ultimately their reputation will be the reputation that is at stake if the product fails. And so I think those kinds of considerations are very important for microfinance organizations to assess.
And just really quickly, I think that's the really important role of technical assistance. I mean, that's the kind of why we created the EcoMicro, was because not only are they helping them to create the financial product, but we pre-certify the consultants to make sure they also are able to evaluate the technologies. And so thinking that you can just kind of open, and you probably have seen this, thinking you can just open a spigot of finance to an institution and let them kind of run with it, is that they're not going to have the technology expertise. Exactly. And you really need that needs to be brought in from somewhere.
Last question, and we will open it up to the audience for questions. How do you measure impact? And particularly when it comes to clean energy, how do you scale these projects? And are we making a real dent in terms of carbon emissions, in terms of energy costs? Is this happening?
Well, can I? Do you mind? I love this question. We actually are really interested in all of the different dimensions. So we're interested in the financial impact for the end client. That means, has that person's income gone up? So for example, if I'm a weaver in West Bengal, and as a result of having this light, I can actually produce more product at the end of the day and sell it, has my income actually increased? We actually have some clients that are BD rollers. I don't know if you know what those are. Those are little cigarettes. So, in some environments I can't talk about that because it's not okay. But actually, these women have said their incomes have doubled. Okay, so that's actually a very important measure. Has it actually increased the income for clients? And the other financial measure that we're very interested in is has it reduced costs for them? In other words, are they saving money because they're not spending it on kerosene? So what is the actual money in their pocket which they can use for other things as a result of this? Those are two important measures. Another thing that we're very interested in is the education benefit. So, for example, a lot of people will have lights in order for their children to be able to study. We actually have one kind of loosely linked partner. I think you're perhaps interested in them. Sunny Money is an organization in Kenya where they have actually shown that families that have access to solar lights, the grades of the children have gone up. Now that's actually very powerful if you care about, how your kid does in school, and if you view your kid as a potential pension plan for you, meaning that if that kid does very well, you'll be supported in your old age. That's a very interesting investment. There are lots of people who care about safety issues. So, for example, with a solar light, we actually have had women say to us, with a solar light, a woman said, I'm less anxious. I was thinking, what does she mean, less anxious? What she meant was she didn't have to sit with her kids when they were playing because she knew that if the light fell over, the house wouldn't go on fire. So she could just leave them to play on their own, and it never occurred to me. I thought that was such an interesting, you hear about the lights going on, but that it made her less anxious, I thought was very interesting. Safety considerations, women being able to use lights outside so that they're not raped when they go to the bathroom, which happens in some places. So, or just the security around the home. Those kinds of considerations. And then, of course, the CO2. We actually measure the CO2, the decrease in CO2. So just for the project that we worked on in 1 year, which, by the way, had D-Light lights. So all three of us are connected through this particular project. We reduced 400, so in 1 year, from April to April, we reduced through the number of lights that were sold, which was 6,000 lights, through the remittance project, we reduced 484 tons of CO2. Now, if not one single light had been sold at the end of that period, if you just project the CO2 reduced through the following year, it would have been 1,221 tons of CO2. Same data set. We found that we calculated it was $218,000 saved, and which again, if you projected just those units sold, so it's a kind of a decreasing, in the first month you sell 300, in the second month you sell 600, so you kind of do it on a decreasing basis, it would have been $759,000 saved in the pockets of those people.
Which is almost exactly how much the MIF paid to implement the project.
So they love that.
It's a really good return on investment for us.
Yeah, they love that. So, it's actually real money. That's real money in people's, in poor people's pockets. So those are some of the things that we measure.
So while many of the items that you touched upon are extremely important, and we do track them, at the end of the day, we are a capital provider. So we have to be cognizant of what types of metrics we not just monitor, but we also keep the institution we keep the institution in terms of a benchmark or uphold them to. And so the way that Deutsche Bank looks at social impact is really kind of intertwined, like DNA, alongside its business objectives. So we want to make sure that the social impact is in line with its business objectives, and firstly, in intent, and secondly, with the quality and the production of the product, and then thirdly, with how they are serviced. Because at the end of the day, if you are creating a very appropriate product that's relevant to the needs of the population, that's good for your business, and that is also good for the social impact of your business. So there are different ways that we look at this, though, because ensuring that we remain relevant for each different company, we look at the way we measure impact on a very individual level. So we will have very firm conversations with each enterprise to kind of determine what are the key business goals that also align with social goals, and how should we monitor these types of goals. An example could be around job growth. It could be around sales of units that are directly geared towards the base of the pyramid. It could be a number of households that they estimate are electrified post investment. It could be the amount of additional household income that is saved through kerosene sales and other replacements. And lastly, it could be actually on a point which is for us very, very important, which is around customer service, because we see that the follow through and the after service sales on products as a very integral part to ensuring that there's a socially impactful and relevant product. One of the metrics that we've looked at is oftentimes these companies offer some sort of warranty program. And sometimes these warranty programs include a number of prescribed visits. For instance, Orb Energy has committed to setting up three distinct visits to each product that they sell. And once a product is sold, each person has a schedule for an entire year. A trained technician will come to their household and check up on this product. So the Orb Energy has to then basically keep track of the number of customer service visits that they make. So one of our benchmarks is what's the percentage of the customer service visits that they've made. And these metrics are not just metrics that we monitor. We actually put this within all of our loan documents. These are within our social covenants. So we'll see. We're at the beginning of our relationship with some of these companies, but it'll be interesting to see how it evolves and how we're able to further finesse our ability to track the impact.
And we're a development bank, so we love to track indicators. And my colleagues in development effectiveness love to track indicators even more than I do. So we're tracking them in, all sorts of different levels. We're tracking basically everything that's been said here. It's because we're tracking it at the systemic impact. We want to see if the model that we created in Haiti gets replicated in Africa, for example. At the impact level, we want to track, do the households who receive the technologies, do they have higher income because they're more productive? Do they have lower energy costs in dollars and in kilowatt hours because of the products that they're, so we track all of this, because of the technology put in place. We track the number of small businesses that are buying these clean energy products. We track the number of individuals. We track whether or not an MFI has put in place risk management tools for adaptation to climate change. And then we track the energy savings in kilowatt hours and then translate that into CO2 for the MFIs and their greening. We track whether or not they put in place a manual of environmental guidelines and policies. I mean, this is just kind of touching the surface. There's a lot of different things that we track. But the reason we track all of this is, yes, we can report to our donors, but much more importantly is going back to, I think, what we're all kind of saying here, which is that if this is really going to take off and scale, it has to be a real business. Yeah. And if it's going to be a real business, you need to be able to sit down with the CEO of that financial institution or of that small business and explain to them why this makes sense. And you can only do that if you have both the financials really strong that show the financial impact, but also the social impact. Because also, if you're looking to find grant money for some of these projects, and we're talking a little bit about how you need to be able to evaluate the technology, or a lot of these are kind of new and first mover type projects, and so a lot of cases we're providing grants. But if a MFI or an institution is going and looking for this financing, be it on a commercial side or on the grant side, they need to be able to show that they're going to have a mission benefit, which is usually a social benefit. So that's why we want to track all of these things, because it's the only way we're going to bring it to scale.
A lot to chew on. So we're going to open it up to the audience. If you could please identify yourself. There's also a microphone coming around. We'll start right in front here.
Hello, I'm Roma Stibravi and president of NGO Sustainability. I've been working on these technologies since the early 90s. I have two, one is an observation and one is a question. When you work on the improved cook stoves, do you include solar cookers alongside? Because don't forget that the improved cook stoves are still creating carbon. And solar cookers can be extremely effective. When I do projects, and I have one in Liberia now, I do both because they each have a very important place. I have been trying to get the Global Alliance to think in these terms, and I haven't been successful so far, obviously. So that's the question. The observation is that if solar lanterns are so effective and you're so enamored of them, why don't you just give them away? Why shouldn't everyone have them who lacks electricity? I mean, why don't you do something like Jeffrey Sachs's bed nets, or get Bill Gates? I mean, just think of what the kind of money he and Warren Buffett have put out. Just get it to the people if it's so effective.
Can I try
Please,
on
yeah,
the
go
solar
ahead.
issue? Because
Yeah.
that's a totally valid question, and one that we get. We've seen in cases, Haiti is a good example, where right after the earthquake you had a lot of technology going in for free. Cook stoves and solar lanterns. On the cook stoves, when we went back 6 months later, because the product was given for free, it wasn't taken care of, and it wasn't really used. It wasn't valued by the household. On the solar lanterns, what we saw was that if it's not a commercial enterprise, first, it's not sustainable in the long term. But even more, I'd say, what equally important is what we were talking about with guarantees and warranties, is that when that product breaks, there's no one standing behind it.
Right.
And so, and we've also seen that people tend to take care of the product more when they've purchased it. So for those reasons, I mean, and I also work in a private sector development wing of the IDB, but the IDB itself is not giving away lanterns, because in order for it to kind of grow and to not just basically kind of be one round of giving out lanterns and end, we have to create these businesses so that it's something that's sustainable.
But you need the business in any case to make the product.
Well, I have a sort of, I agree with everything Greg said. What we do is we're actually product neutral. We do market research before we do any project anywhere. And we include a whole range of products from including solar cookers. What's really interesting is listening to clients respond. So for example, when they understand it's going to take 6 hours to cook the beans, they're not so interested in it. If they think it's going to cost $150 to buy it, and really they think it's only worth $30, they're not so interested in it. So I think the important thing with any product is to basically let the people who you assume are the consumers decide whether they want to have it or not, and give them a range of products, and let the product which works best in the market be the one that's bought. If it's solar cookers, fantastic. If it's, if you look at the kinds of cook stoves that are available through the Spark Fund, there are maybe 15, 20 different varieties. Some of them that have been around that are, people are not buying them. I have what I call the chapati test, okay, for those of you who know what chapatis are. Basically, pretty much everywhere around the world, people eat flatbread. Can the stove cook flatbread? If it can't cook flatbread, if there isn't a way to cook flatbread, it's probably not going to work in certain places. So I think that, I think basically what we have to do is, we're here in the West and we think this is super cool and we've decided this and that. If they buy it, they buy it. If they don't buy it, they don't buy it. What we have to do is provide it in the most effective way as possible, the various kinds of products, and make sure that it's high quality, that it will last, that it's guaranteed, and that we're treating poor people with respect as consumers. That's what I think is important. I mean, I have a bias also toward, as Greg said, sustainable business options as well. Part of why I'm not wildly keen on giveaway programs unless you're in a relief scenario, which I think is very different, is that when you're actually building businesses, there are a whole slew of benefits that occur that aren't visible. There are the people who are employed. There are the people who are actually the employees of the company who benefit. There are the people who are the distributors. There are the suppliers. There are all these people along the value chain that end up benefiting. So, that's another reason why I think it's important. But maybe there are other questions.
Wait, just one more note on that. I'm sorry, but I think what I think all of us are really saying is that there is an ecosystem effect to energy and to lighting in particular, because you can provide one solar lantern, and solar lanterns are incredibly effective. But what would be most useful beyond just the job creation as well as the warranty, but think about how difficult it would be for a sustainable company to develop a range and suite of products that brings a client up the ladder of energy access. And I think that's our goal. And I don't mean to speak for you all, but I think that we're hoping to be able to provide the appropriate products at the appropriate time so that we can help elevate the darkness into the light.
Next question is over here.
Yeah, how are you? Jonathan Rottenberg from Green Investment. First question is related to risks. What are the rates related to defaults that you see in this specific solar in Latin America? And the second thing is about the cost. What are the costs that you see in terms of soft costs for the implementation and for the ongoing, meaning the operation and maintenance? How do you define that? But the first question about the default. What are the defaults that you see? Thanks.
I was actually thinking about the cost.
Okay.
But in terms of, that's a really great question, because that's something that's the main focus of what we look at and how we analyze a energy solar enterprise, because oftentimes people get swept away by the technological advances of how cool a solar lantern or cook stove may seem. But at the end of the day, what we focus on are the fundamentals of the distribution, of the quality of the product, of the pricing of the product, and whether that's appropriate. We are extremely concerned about the management's ability to control costs, because it is, at the end of the day, many times a manufacturing type of company. If it's not a manufacturing type of company, then it is a distribution company with heavy logistical needs. And being able to identify how to get product from the port to the last mile out in the rural villages of Uganda is critical. So for us, I think what I kind of highlighted there are the main costs and really the big concern of how we look at analyzing the risks of the opportunity.
What are the rates?
I'm sorry?
Default rates.
The default rate.
So, for example, for Solar Now that I was mentioning earlier, which is a solar company in Uganda, their portfolio at risk is 1.3%. So,
It's actually a little bit less than that. And when we look at the portfolio of microfinance institutions that are offering energy loans, and I'm lumping together both kind of energy efficiency and clean energy, the portfolio at risk is actually lower than the portfolio at risk of the general institution usually, because it's a very targeted type of loan,
right,
and you're usually substituting some other cost. So it's not, you're not taking on a product that
right,
is just, it's not a car loan where you're just paying the car loan. You're substituting your electric bill, or you're substituting your kerosene. And so we've had very, very, very low losses that we've seen.
Okay, right here.
Thank you. My name is Alfonso Diaz. I'm an economist. I have a very, very private practice. I'm wondering, following up on the question of the first question that the lady addressed, what about not giving away, but providing subsidies along the lines of the very successful subsidies that have been implemented for primary education throughout Latin America? That leads me to ask more specifically if you account, maybe I should address this question to Mr. Watson, because I guess you do CBA, cost-benefit analysis, or is that too much of an old-fashioned? Do you account for externalities, or just plain bottom-line banking? Like if you provide these services, you are creating positive externalities. How do you account for that?
Well, yeah, I mean, I think partially it's in the indicators that we use to track job growth or to track, you know, a lot of the things that Nikki was mentioning. We'll track whether or not there's a greater feeling of security, whether or not there is more studying going on. So, I mean, in terms of the positive externalities, we track those as part of the project. And, you know, one of the benefits of where I work in the IDB is that we're a laboratory. So we don't have to basically choose projects based solely on profitability. You know, we're able to mix and match. We don't have to do some projects that have very little development impact to be able to do some that are very developmental. And we're allowed to make mistakes, and we're allowed to take much larger risk than somebody who, because we don't have a credit rating to protect. We're a grant fund. We're a fund. Money comes in, it's depleted. So we're able to take larger risks. So we do a cost-benefit analysis, but we probably take a larger risk than most other traditional investors in our loans and our equity would. And, you know, with our grants, it's a grant. So if we write, we're expecting to write it off.
It's in the back.
How's it going? My name is Jack Luff. I recently graduated in a master's program. I had a question, probably maybe a little bit more for Mr. Watson, but open. I was kind of wondering about the connection between, potential connection with government policy on some of these things, and how you're concerned about putting in the language of cost effectiveness or reducing cost. One thing I was thinking about was I know in Ecuador, and I think in the next couple of years, they have a lot of hydroelectric dams going on. And they're trying to reduce, I think, propane subsidies, which people use for cooking. And I guess one of the ideas is to have, they'll pay for the cost of the electric stoves at the start, but then people that have these stoves will start paying into the system. And I was wondering, like, something like that creates a huge demand, and you have kind of the government involved. Do you guys, does the IDB look at these options as well, or are those kind of more outside of, like, governments don't want as much consultation?
For us, that would be much more in the kind of the public sector side of the bank that's doing these large infrastructure projects. At least on the private sector side, we don't like to work with subsidies. And I'd say that, you know, in terms of the policies, though, we do see impact of policy. I mean, in Haiti, we saw, right after we started the project in Haiti, the government decided to put a tax on remittances, every remittance transaction. So that has a clear impact on that type of project. In other cases, we see where, you know, import duties are very high on these products that are usually coming from Germany or from India or from China. And so, you know, the government can make a concerted decision to lower tariffs on those types of products.
Right.
And in some cases, you know, they're moving in that direction. But also there's the whole range of energy policies. And if you pick up the climate scope, you can see the ones that we measure. But, you know, they go from everything from blending mandates for fuel to, you know, renewable mandates for generation. But, you know, at the end of the day, in Latin America and the Caribbean, in almost every country, even if you put in a massive dam and you have a subsidy and you're going to run lines out to a community, there's going to be communities that are rural that are not served by the grid. And so, you know, in some countries the proportion is much larger, in other countries it's much smaller. But even in Peru, you know, we're doing work with telephone companies that are doing mobile phone cell towers, where they can add excess capacity for generation to power the cell tower and create a mini grid to serve a town. Because that town is so remote in the Andes that the lines are never going to get there. So, you know, it's a really complicated mix of how it all interplays, but we have seen that the policies seem to be getting better on the whole.
Yeah, and just on the issue of subsidies, I think there are subsidies that are smart subsidies, and there are subsidies which are not smart subsidies. And, you know, one of the challenges with subsidies is sometimes when they're put in the beginning, there isn't a long-term plan. Like what happens when the government changes and they decide they don't want the subsidy anymore? What does that do to the market? And so I think that, you know, and there are plenty of things that are subsidized which we don't think about. Fuel in the US, which we use for our cars, believe me, coming from England, is subsidized. So I think that this is a very interesting and complex question, as Greg was saying. And I think in the area of creating, I like to talk about incentives. Incentives to encourage businesses to operate, and to think about them not just for this week and what's going to get me elected this week as a politician, but, you know, into the future. How is it going to affect? What's going to happen if I go away? How is this going to affect the market? Have we created a business line here where if that incentive or if that subsidy goes away, it's going to crash the market? You know, those I think are important questions to ask.
I think I made a mistake in phrasing it. What I was actually trying to get at more was using the idea of reducing subsidies as a way to get governments on board. In the sense, like in the case of Ecuador and those ones, like their goal is to reduce maybe $200 million a year in propane subsidies. And that might be a way to get, and I agree that there's the question of rural areas, but that there might not be any subsidies that the government would be reducing. But to use that, because I was thinking about, you were talking about the language of the business and how do we reduce our costs. But that's another way with fuel subsidies or energy subsidies throughout the region, which are often pretty high. But maybe that as a way to get a partner being the government with a lot of pull kind of in the thing. But maybe that's what I meant. I wasn't trying to promote subsidies.
Let's go to the next question in the front.
My name is Simon. I work with the US.
Can you wait for the microphone?
Thank you. My name is Simon. I work with a USAID program to incubate and commercialize renewable energy technologies and then bring microfinance investors to them. I have two questions. One goes back to the issue of risks and default. Are you finding that microfinance institutions are looking at underperformance rates when assessing them? For example, in waste, most waste projects are produced somewhere between 40 to 55% of estimated emissions reductions. And then the second question goes to impact, and it's something we're looking at in our own program. For calculating emissions reductions, are you finding that the microfinance industry is gravitating towards a particular standard, the clean development mechanism for measuring our voluntary market standard? And the reason I ask that is a question that this lady asked. It's called leakage in carbon finance. If a project is actually creating emissions, projects I'm finding, proposals I'm looking at are often just stating what they're reducing without netting out leakage. And that's also another potential source of revenue, given that, okay, carbon markets are down right now, but there are still programs you can sell to. And are you seeing that in any of your programs as well? And is that something you look at? Thank you.
I mean, I would say that in microfinance, we're at a very, very early stage. And I think that these are important questions, which I think will become more and more important as we move forward. On the issue of how people are calculating, I would say it's all over the place. And you know, one of the things that we're trying to do is at least standardize with our own partners. You know, are they calculating it in the same way in Haiti as they are in Uganda, as they are in India? You know, what are they doing that's different, so that when we talk about these numbers, we're actually comparing apples to apples and not apples to, you know, melons or something else. So I think it's an important question. I don't think we're there yet with standards. You know, in the microfinance sector, for those of you, I would say I'm a great grandmother of microfinance now. I've been, you know, in the sector since 1993. In those very early days in microfinance, we didn't even use the word finance. We talked about microcredit. No one even imagined that there were standards. It took, you know, 10 years to create standards in microfinance, which we all now take for granted. You know, those of you who know what the mixed market is, that didn't exist. You know, it's sort of like when I say to my children, you know, there was a world before iPhones. They think I'm, you know, 1,000 years old. But it was sort of like that, you know. So I think we're going to catch up to ourselves, and this standardization will happen. There are those of us who understand the importance of it, and basically it will happen through organizations, you know, certain organizations taking the lead and pushing those issues forward, and we'll adjust. You know, we think we have a fairly cool way of calculating it, and probably we'll find out that, you know, we're missing something, you know. So it will require collaboration amongst a number of different people who are involved in the sector. And also from lovely donors and investors who will say, no, you can't do it like that. You have to do it like this.
That's
You
what I
know.
was hoping would come out of it.
Well, we try to make it relevant to the project that we're doing. So we have projects that are selling credits on the CDM market, and so they're using specific standards to do that. You know, and we have energy efficiency and water efficiency heating efficiency projects in Mexico, where that's the whole purpose. That's the way that the project is going to be sustainable. So you know, that's got to work. In the example of the project we do with Nikki in Haiti, you know, the purpose is different. You know, the purpose is to set up a business model in Haiti that is getting lanterns out to rural areas that were previously unserved. So we want to be able to track, but the way we did it there was more with, knowing how many lanterns we sold and doing surveys on what the usage of those lanterns are, and therefore calculating what the substitution effect is. So, we don't want to apply one standard to all of our
Right.
projects, because frankly, then half of our projects wouldn't get done. Because, and also, it's difficult, especially in Latin America with some of the markets, many of our countries are not eligible to be, for the credits we purchase from those countries, Haiti being an exception, but so it's complicated.
Okay. In the back.
Thanks. I'm Sarah Enright. I work with the United Nations Development Program on a program called the Business Call to Action. It's a program that works with companies that do inclusive business, and it's interesting because we work with organizations like Solar Now and D-Light. They're part of our membership. And one of the things this question is really targeted at Deutsche Bank, but my question is, when I'm looking at those social enterprises that are built entirely around, especially it seems in the energy space, around solar lanterns or clean cook stoves, it seems like they really focus all of their energy on that one product. And I'm wondering whether you guys take a look at, as as you're helping these organizations to grow, product diversification, and looking at other ways that they can leverage their distribution strategies, or their pretty outstanding ability to get into rural areas, or their innovation, product innovation for other purposes for reaching base of the pyramid markets, and whether that's instead of just growing and reaching everybody around the world, instead going deeper with the customers that they already have a relationship with. And I'm wondering whether that's part of something that you work with them on.
That's a really great question, and I think I would respond in a couple of different ways. So firstly, Deutsche Bank's current effort to support social enterprises, solar lanterns, and cook stoves, it is still fairly early. So we're taking a very portfolio view on the types of institutions that we support. We've supported the very low end of the market, institutions like D-Light and Greenlight Planet. We're now also moving a little upstream at other organizations like Orb Energy that have larger systems and have since moved downward. But that, to us, is a step and a peek into a different type of industry and a different type of product line. That being said, we're also looking at different business models. There is a company that's actually based out of Brooklyn, which is a cook stove company that has a very interesting subsidized model. They sell a very a normally priced, normally U.S. priced cook stove product that's actually used for higher end participants, people like you or me who would be interested in using this when they go camping. And that's their core bread and butter business. Although the mission of the company was initially to create this cook stove that would be able to target the base of the pyramid, they found that with their research and their marketing, they were able to produce this very business effective and sustainable product. That being said, they have not forgotten their main mission, and now they're trying to pilot a $40 cook stove that they're targeting to launch in India and Africa. And this type of business model is slightly different because it's starting to show the diversification of the different products. As we move forward, though, we are looking at companies that are trying to access the distribution channel in the way that you're describing. One of the companies, which is Solar Now in Africa, their initial core goal is to provide lighting to poor rural households in Africa. But that being said, they're also introducing other product lines. They have recently, I believe, introduced a television. Mm-hmm. And so they are giving their consumer the ability to first sign up for a lower tier product, which is the lights, the system of the lights. And then once they graduate from the light system, then they can move on to possibly having a fan and then having a television and that type of work. Mm-hmm. And so we're kind of looking at, we haven't made any decisions as to what works or what doesn't work, but we're very interested and want to support the innovation that's coming out of these entrepreneurs right now.
Yeah, just to support what Amy is saying, this idea of the energy ladder, we talk about the energy spectrum. Solar Now, which is one of our partners as well, has this idea that what you have to do is you have to look at what the consumer can afford. So a simple solar light is like riding a bicycle. A solar light that charges a cell phone is like riding a moped. A lighting system that lights 3 or 4 lights is like a rickshaw. don't sell them the Rolls Royce if what they really want is a bicycle. So I think that what we're seeing is companies that are understanding consumers, this group of energy consumers, in a much more sophisticated way than they did originally. I think the company you were referring to in Brooklyn is BioLite. Now, BioLite's very interesting. It's a stove company. This stove also charges cell phones. That's super cool that they've worked out how to do that. So I think what we're seeing now, when we first got involved in this sector at Arc Finance, there really weren't that many companies out there. Now there's a proliferation of companies. The costs are coming down. And what they're offering to the low-income consumer is actually pretty sophisticated. And I think that's really interesting.
And just one last point on that, because besides the supply side, on the distribution side, I think we see the same exact thing happening.
Right.
And I mean, one concrete example is in Haiti with the project that we were talking about.
Right.
We saw that there was demand for small solar lanterns, and then that same family will come back and buy a small, one-room solar system. Then they'll come back and they'll add another module to it to do 2 rooms. And the thing that our partner in Haiti loves about this remittance platform is that they said, right now we're selling solar lanterns on it, but 5 years from now we could be putting, any other type of product
Exactly.
on that.
Water filters.
And that's the same way that we're jumping on to microfinance or remittance networks to be a distribution platform. But once you have the distribution platform for solar lanterns, or for cell phones, it's the same. It's kind of what you're hearing a lot in development now is use the existing networks to add other products. And so I think we are seeing that happen a lot, especially in Latin America and the Caribbean.
Exactly.
So we're 5 minutes left. One question, please make it brief. Here.
Hello, I'm Andrea Ruotolo. I'm a PhD student at the Center for Energy Policy. I did a work on South cooperation for increasing electricity access. Because here I'm listening more that you're working the North-South transfer, and I would be interested to know if you are working, trying to help this South-South cooperation to improve.
We're definitely all about South-South cooperation. The way we talk about it is practitioner transfer of knowledge. So the idea that if you're so Solar Now, for example, that we've been talking about, is a company that's based in Uganda. They have come to work with our partners in India because there are aspects of their model which are very interesting to those organizations. Same thing the other way around. We have one partner, which is a company called Bandhan, which is the largest MFI in India. It has 4 million clients. They went to a tiny MFI in India. This is South-South cooperation that had a very interesting energy product to learn from them. So, we believe very strongly that creating an environment for these kinds of exposure visits, which are South-South types of visits, are, very important. Some of the companies that Amy's talked about they're not created by, cute Stanford grads. They're created by Indian entrepreneurs, So I think that, these are companies that are actually, that have grown there or that are Latin American organizations. So I think this idea is very important.
Yeah.
I studied Argentina, Ghana, Rwanda, and India, and what I discovered is that there's enough, you think, okay, that 4 countries have nothing to do with each other, and I know there's a lot of potential.
Exactly, and I think many of you are familiar with the idea of mobile money. That did not generate here. That was Kenya. That was the Philippines. We're actually learning that is South-North. Forget South-South. We're learning from some of those places.
And I think it's important, to use the existing networks that exist. So, for example, we're implementing several of the climate investment funds, and that provides us with a great opportunity to work with other. For example, this is forestry, but we're working on cook stoves basically in Honduras, and the lessons that we learn there can be transferred through the SREP to other countries. With the model we did in Haiti, we're actively trying to bring that to Africa, to Asia,
Exactly.
and with EcoMicro. Nikki and I were both in Helsinki, in November, which is a cold time of the year to be in Helsinki. but the whole purpose of that event was to bring experiences from Latin America to Helsinki, where invitees from the African Development Bank were there, and so we were able to transfer knowledge that way. The African Development Bank was a little bit kind of farther behind, I think, in some of these kind of innovative schemes, and so in this case, it was a transfer that direction. But we get transfers into the IDB from Asia, for example, all the time. So I think using those types of networks and using links between
Yeah.
multilateral development banks, through our partners, through commercial institutions, I think it's happening more than it was in the past.
Great. Well, this has been a fantastic panel. I've learned a lot myself. Just want to please join me in thanking our panelists.